get in touch with us anytime. Thank you.
Sure, sir. Thank you so much, sir.
Thank you, sir. Thank you for your insightful session. Thank you, sir.
Right. In the last 10 days, we have covered almost all smart technologies in food and agribusiness. And looking forward to upcoming sessions on AgFintech, entrepreneurship, and agri exports and career guidance. These 15 days, I'm sure there'll be a great learning experience for you all. So moving on to the next theme of AgFintech. I welcome Mr. Ashok Dhamankar, sir, Chief Financial Officer, CFO, Financial Services, UPL. It's a pleasure introducing Sir to this platform. Sir is a qualified CA and CPA from the USA and ACA from England. He has vast experience in the AgFintech field. He served initially in National Collateral Management Services Limited for a total of 12 years and in Samunati for 3 years. Sir is also a freelance practitioner member of ECGI, European Corporate Government Institute. Sir talks on agribusiness sustainability, fintech, capital markets, ESG, SDGs, and warehousing. Sir has a vast experience as Chief Financial Officer and he has been instrumental in agri value chain, rural economy, and sustainability. His domain knowledge is also on logistics and commodities. Thank you very much, sir, for joining us today. Over to you, sir.
Yeah. So, Bhupesh, thank you so much and good evening, everyone. I'll be talking about AgTech, FinTech, and along with that, since I have worked in agri warehousing companies, rural, farmer-centric, financing, warehouse receipt funding, project financing. So I'll try to cover most of the topics. However, you will appreciate that so many topics to be covered in an hour's time is impossible, but we'll try to touch upon those topics and so that students here should get a glimpse of it, and whenever they refer any of the topic in future, they should be able to get some little bit knowledge about this so that they can do further research on this and they can tackle that issue. So just to give a little bit background about myself, as Bhupesh told about, I am a practicing chartered accountant, not practicing in the sense I'm not practicing filing returns and auditing and all, but I'm a chartered accountant in the industry. I have worked in National Collateral Management Services Limited. Now it is National Commodities Management Limited. It's a Fairfax company. I would like to bring it to you that when we started this company, it was a company started in 2005, 2006, when commodity exchanges were just entering into Indian market, Indian diaspora. And these markets like NCDX was the first commodity exchange which came up in India. So to take care of the back-end operations of the warehousing and commodities, we started a company called National NCML, which was taking care of warehousing, collateral management, testing certification, farmer funding, funding to SHGs, funding to JLGs, funding to women farmers. So that way this company was started. I left that company in 2019 as a group CFO. We had by that time 13 companies in the group. And post that, I got an opportunity in a company called Samunati, which is also into aggregation, market linkage, and NBFC. It's one of the very highly successful fintech, also AgTech. So it's a perfect mixture of AgFintech. So that company has done very well in terms of funding to farmer producer organizations, farmer producer companies, farmers, again to self-help group women farmers, and the farmers in especially we used to bring a lot of money from overseas, like green finance, climate finance, and sustainable finance. That money was used to deploy to the market, to the farmers, to the FPOs, and to the FPCs. After that, like last year, I joined this company called United Phosphorus Limited, erstwhile. This company is now UPL. So UPL is one of the largest company. I'll just try to show my presentation here so that you all can get a glimpse of what I'm talking about. I'll, Bhupesh, do I have, can I share my screen? Yes, I can. So my presentation is here. Just tell me, Bhupesh, if it is visible.
Yeah, it's visible, sir.
Yeah, okay. So, we are working on a fintech called Nurture Financial Services, which is part of UPL Group. This is a fintech wherein, whenever we get an NBFC license, that time we will actually be borrowing in the balance sheet of the company. But till then, we are trying to resolve the problem of financial inclusion or funding to farmers with the use of this fintech called NFS. This particular slide is a little bit about the UPL, about the core values, about businesses, and how are we going to solve this problem for the agri value chain. So you must have heard, you must have seen Open Ag. Open Ag is a brand, is an initiative by UPL. That is, it's an open network for agriculture, for farmers, and for everyone, all of us, because UPL is a company having presence into 140 countries. Major revenue comes from Latin America. About 40% is contributed by LATAM, 20% by North America, around 10 to 15% by Europe. Southeast Asia contributes, including Australia and New Zealand. India contributes around 8-9%. So although it is an Indian company, major revenue comes from abroad. That's why recently our headquarters have been moved to London. So Mumbai headquarters is for Indian companies, for companies like UPL Sustainable Agro Solutions, UPL Swal, and other companies, including a digital platform called nurture.farm, nurture.trade, nurture.retail, and nurture.sustain. So all these are platforms. So UPL has physical presence as well as digital presence. So it's a complete model for physical presence for seeds, crop protection, post-harvest solutions, soil health, water technologies, plant stress and stimulation, and aquatics. Although these are the business segments, the main business segments is providing sustainable agri solutions to the agri value chain, and that also includes natural plant protection. And that's how UPL as a group trying to resolve food security problem for the world, because sustainability is one of the important characteristics for all the segments, all the businesses, all the activities. That's why we call our core value is reimagining sustainability. So how are we going to resolve problem for the agri value chain? So one of the biggest problem for the agri value chain is access to optimally access to finance, which is charged at optimum rates. So access to finance to farmers, to the agri value chain, to FPOs, FPCs. Although you might have heard about many institutes, including government, PSU banks, private sector banks, everybody wants to show that they want to do funding to agri value chain. But in fact, in nutshell, last mile finance, which is to the farmers and to the women farmers, is not so much available at the rates what the farmers are expecting. Although government has given target of around 20 lakh crores of rupees to be given as a priority sector lending to this segment, that is agri value chain. However, farmer getting loans at a optimum rates or without offering any security, without offering any guarantee, is a rare scenario. So we are trying to solve that issue, and we'll talk a little bit about like how are we going to solve that problem. So what we thought, my voice is clear, students? Bhupesh?
Yes, sir, very much audible.
Here, I'm not going very fast, right? It's audible. Yeah. So see what we are saying, I'm trying to understand first, or trying to resolve the issue for one company, one ecosystem, that is UPL ecosystem. Okay. So, UPL being a large organization, I'm presently talking about UPL India. That is whatever markets we are trying to cover, whatever agri value chain participants we are trying to cover. So here you will see on the left side, you will see L1, L2, there is something going on. Somebody is talking something else.
It's resolved, so you can please continue.
Yeah. Okay. So what we are saying is that agri value chain should be able to avail access to finance, access to credit, and that way whether we can achieve financial inclusion of the people, of the areas, geographies which are generally not covered under the financial inclusion or access to credit. So on the left hand side you would see there is lender 1, lender 2, lender 3, lender 4. There are some NBFCs. There are some platforms which can offer services to agri value chain. So here, what we are thinking about, we as a fintech, we as a SaaS-based platform, we are trying to connect all these lenders to the agri value chain within the ecosystem of UPL. So you would see that UPL has a very strong network of dealers, that is dealer 1, dealer 2, retailer 1, retailer 2. Then through the retailers, there is farmer 1, farmer 2, farmer 3, FPOs, FPCs, all that. You would also see nurture.farm. This is a digital platform of Nurture that is of UPL, and UPL also has franchises of around 400 franchises are there who do exclusively deal in UPL products like UPL seeds, UPL insecticides, fungicides, and natural plant protection and sustainable agri solutions which are there. They deal with those. So we have target to expand this network of 400 to around 2000 in years time. So that's how this fintech is working. Now, when we talk about fintech, what is a fintech and what is a AgFintech? So fintech is a platform which is trying to resolve a problem, which has a problem statement, which has a solution statement, and has a go-to-market strategy. So fintechs or a agtech is nothing but a agriculture-related fintech. And when we talk about this particular space, that is of agtech and fintech, it is going to be huge in coming years, because you would see here importance of AgFintech. I just talked about. Let us first talk about AgriFintech. What AgriFintech can do? What is the importance of that? What is the AgriFintech? And what is the market? What is the potential for AgriFintech? Now, when we talk about importance of agri, so agriculture being an important segment which contributes significantly to the GDP of the country, and most of our farmers are based out of rural areas. More than 60% population is in rural, yet maybe it be in the range of 55 to 60%. However, what government has understanding about doubling farmers' income. Now, how to double the farmers' income? Why it is so important to double the farmers' income? How it can contribute to the GDP? How we can achieve $5 trillion economy, the target of government to achieve by 2030 or 2027. You are aware that we have already reached, crossed UK and become 5th largest economy. There are only 4 economies ahead of us. That is number 1 is US, which has around maybe more than $20 trillion economy. Second highest is China. The third economy is maybe France or Germany, and Japan also ahead of us, and we are now 5th. So if the farmers' income is doubled, farmers' population in India is likely to be at least 150 million. 150 million farmers are there. That is about 15 crore farmers are there. So although farmers are 15 crores, there are at least 3 times or 4 times dependent population on the basis of farmers' income. That means if you address farmers' income, that is of 15 crore farmers' income, if you address, indirectly you are addressing the problem of 60-70 crore people, which is half the population or more than half the population of India. So that's why farmers' income is very important. How are we going to double the farmers' income? So government said that, farmer is very important. Farmers should be given benefits of low credit, facilities like subsidies for constructing warehouses, all those. So now while doing that, it is hardly, it will be impossible for government to reach out to each and every farmer. So to reach out to the farmers, government decided that let's make FPOs, strengthen the FPOs, FPCs and companies which are startups which are into agriculture. Now there are about 3,000 to 4,000 active FPOs there in the market, which are doing good. Like, you must have heard about very successful, highly successful FPO model of Sahyadri Farms. Sahyadri was started by an individual. Now it is doing a lot of exports. It is achieving more than 600-700 crores of top line. So it is one of the most successful FPOs. Like that, if one FPO is successful, there are about thousands of farmers, like 5,000, 10,000 farmers can be benefited because of the success of that particular FPO. So government thought of strengthening FPO economy, FPO ecosystem, FPOs, FPCs. FPO is a farmer producer organization, which could be a cooperative or which could be association of persons or body of individuals, or it could be cooperative. FPC is a company registered under Section 8 of the Companies Act, wherein there are shareholders and normally, like, companies follow standard protocols. FPCs, which are the companies, they follow the standard protocols. Now, by strengthening FPCs, FPOs, ultimately government is targeting to double the farmers' income. If the farmers' income is doubled, it will contribute significantly to the GDP, and our dream of achieving 5 trillion economy by 2027 or 2028 is likely. That's why agriculture is very important to the government. We are an agri economy, and that's why government is spending a lot of money. Government is giving a lot of benefits. If you see this recent budget has given, we talked about like 20 lakh crores of priority sector lending. Now, when we talk about priority sector lending, what is priority sector lending? Like public sector banks, private sector banks, foreign banks, and all other cooperative banks have been given a target by government that whatever advances you are doing, 40% of that should go to priority sector lending. Now, which are the priority sector lending areas? One is, of course, agriculture. Second is education, home loans, health, sports, all those areas which are there, which qualify for the PSL. Government has given a target. So out of this 40% of PSL target given by government to the banks, at least 18% is for the agriculture. Now, 18% to the agriculture is a big money. If that entire PSL goes to agriculture, definitely we should be #1 country in the world in terms of agriculture production, agriculture export, and overall gross value addition to the GDP. So that's why Agri is very important. What is AgriFintech? AgriFintech is an agriculture technology financing company. So there is, with the financing, we are trying to address problems of agriculture, problems related to the production, problems related to yield, problems related to enhancement in the rates, or giving the market linkage for the agri products, or technologies like drones, which earlier lecture we have talked about. So any company, any fintech, any AgFintech working in these areas can qualify as a AgFintech or a fintech or a AgTech. So now, when we talk about AgTech and fintechs, how AgTechs and fintechs can improve farm and farmer economics, how they can resolve the problems, how they can solve the problems, what are the problems they can solve. Like take a case of NFS, Nurture Financial Services. Suppose presently, if we talk about what is the actual credit availed by farmers, the smallholder farmer or a women farmer or a group of farmers or the FPOs, it is less than 30%. You will see here, farmers dependent on formal credit is 30%. So FY22 PSL lending to agriculture is $220 billion. When we say $220 billion, 220, if you convert into rupees crores, it will be approximately 17,60,000 crores of credit was given to the agriculture. The 17,60,000, I have just converted this at 80 rupees. If you convert that, because when this budget was made for FY22, that time rate of dollar must be in the range of 72, 73. If I convert $220 billion at the rate of 75, let's say, so it gives me $220 billion into 7,500 is 16,50,000 crores. So the credit which is given to agriculture is 16,50,000 crores. It's a very big number. If you write on a piece of paper, 16,50,000, after that there are 7 zeros. 16,50,000, after that there are 7 zeros. Now that credit government has enhanced from 16,50,000 crores to 20 lakh crores in the current year's budget, that is 23-24. That's the massive, massive credit which government is planning to offer to the agriculture sector. However, even though such a big credit targets have been given to the banks, how much is the actual credit availed by the smallholder farmer? Now, what is the definition of smallholder farmer? Smallholder farmer, there are some chats, we'll talk about that later. But those were for earlier, this one. Okay, fine. So smallholder farmer is a farmer who holds land of less than 2 hectares. Anyone can talk about, do you know how much is 1 hectare in terms of acres? You can put that into chat. 1 hectare is how much? Approximately, yes. Approximately 2.47 acres. 2.47 acres of land is equal to 1 hectare. So if you see this chart, you are able to see this chart, massive opportunity of financing and lending. Yeah. So approximately there are 15 crore farmers. This number is taken from government side, but could undergo change, like if you take exact number. So about 15 crore farmers are there. Of that, 12.6 crore farmers are below, are smallholder farmers who hold land below 2 hectares, which is a significant. Small and marginal farmer holds about 12.6 crore proportion in terms of out of 15 crores of farmers. So they hold land of less than 2.47 or 2.5 acres. There are medium farmers which hold lands in the range of 2 to 10 acres. That population is how much? Around 19 million, or about 19 million is 19.2 million. That means 1.9 crores or around 2 crores. The large farmers, India is not a country wherein large farmers would exist. Large farmers are only 0.9 million. 0.9 million, right? So, sorry, medium farmers are 19 million, 20 million, 20 million means around 2 crores. 12.6 crores are the small and marginal farmers. 2 crores are medium farmers, and about 9 lakhs are the large farmers. So out of this, 86% farmers are small and marginal farmers. Out of this 86%, only 30% farmers dependent on the formal credit. Formal credit means a credit which is taken from the banks, not from the landlords and not from the money lenders who charge 3% per month and 4% per month and could be 5% per month depending upon the need of the farmer. So out of this 12.6 crore farmers, only 3.6 crore farmers or 4 crore farmers are getting formal credit from the banks. That means look at the vast potential of farmers who are not been given formal credit, who are paying exorbitant interest rates to the landlords, and that is the opportunity for the AgFintech or fintech into agri. That's a potential. This is, I'm talking about a startup. Now, while talking about startup, first you need to understand what is my, there is a concept called TAM, SAM and SOM. TAM is total addressable market. SAM is serviceable, addressable market, and SOM, SOM, SOM is serviceable, obtainable market. So I am talking about TAM, that is total addressable market, which is at 70% of this 12.6%. I am talking only about the farmers. So beyond the farmers, there are value chains like distributors, dealers, others who are there. So total addressable market we are talking about is more than 10 crores of agri value chain partners. Out of, you have to understand like which are the agri value chains you can do the funding. Like suppose we talk about 10 crore farmers or 8 crore farmers who could be given access to finance. That's a total addressable market. Out of the 8 crore farmers, what are the farmers who are into this particular activity like seeds, insecticides, fungicides, or agro solutions? That is your SAM, that is serviceable addressable market. Out of this, how much we as a company, we as a fintech can do? What is my appetite? How much finance is available for me? That is serviceable, obtainable market. So when you talk about fintech, or when you talk about the startup, you have to first understand what is your total addressable market, what is the serviceable addressable market, what is serviceable obtainable market, and then you can decide about your fintech strategy and fintech ecosystem. Now, while talking about the fintechs and the startups, you need to also understand what is your go-to-market strategy. What is your product going to be? You have to first decide upon your product, whether you are going to do funding to aggregators, or you are going to do funding to only farmers, or you are going to give your funding lines to wholesalers, retailers, or kirana stores. Who are your customers, potential customers, and what is going to be your go-to-market strategy? In a startup world, if you talk about GTM, go-to-market strategy, first you need to define about your GTM. And GTM could be a digital platform, could be a hub and spoke model, could be a branch model, could be a model wherein you can give only about the only through the apps. So like that, you need to decide about the GTM strategy. And once the GTM strategy is decided, then you need to address very important critical factor is MVP. That is minimum viable product. A product which you are going to give in the market has to be viable product. Lately, like last 6 months or 1 year post COVID, everywhere you would understand that everybody is talking about funding winter. What is a funding winter? There are venture capitalists, there are private equity investors, there are impact funds, there are DFIs who are wanting to provide money. There is no dearth of money, but they are providing money to only those startups who have demonstrated MVP, minimum viable product. So how do you define minimum viable product? To define minimum viable product, you need to understand whether that model is accepted in the market, whether the product is resolving the problem, whether it is making money, whether it is EBITDA positive, or whether it is making profit for the investors or the startup promoters. Now, you all are graduates, you all are postgraduates or professionals, you understand importance of having EBITDA positive entity or a net profit, which is positive profit entity. If you are making EBITDA positive, that means you are making money into the company, but you are not able to cover some of the costs like finance costs or depreciation costs, which are the costs which are generally important, but not so critical from the perspective of valuation of this from the startups. But a company or a startup which is making net profit positive, that is the entity which is actually getting very good support from the venture capitalists and private equity investors and especially investor world. Okay, so coming back to AgFintech market, we talked about government has given agri credit of 20 lakh crores, 52% of agri households were indebted by 2018. Agri growth rate is 3.9%. Fintech sector in India is expected to reach $1 trillion asset under management and $200 billion of revenue by 2030. That's why agri fintech, or that's why fintechs are there is like a gold rush. There is a rush for AgriFintechs. There is a rush for fintechs because this market is going to grow exponentially, exceptionally very high in coming years. So the asset under management means, like, suppose a particular bank, like you talk about a smaller bank or smaller fintech, which has given loans in the market. So how much is that loan? Suppose it has $100 million of equity, and it has taken loan of $400 million, and it has created a balance sheet of $500 million. Out of the $500 million, it has assets under management of 400. That means that startup has given $400 million in the market. So what happens to balance 100 million? Balance 100 million is in the form of cash or in the form of other investments lying on the balance sheet, or they are waiting for the opportunity wherein they can make use of that particular opportunity and invest that money. So in short, AgFintech or fintechs or any startup pertaining to agriculture or innovation, digitization, rural marketing, or working for resolving problems of farmers, women farmers, it has a very high substantial potential in coming years. Bhupesh, am I going fine, or I have to improve the speed because we have got short of time?
Yes,
Yeah,
sir.
it's fine, sir.
Yeah. So other topics which I want to cover, I will try to be a little faster in those, because those topics have been covered by earlier professors, like, business models in warehousing, or current status of warehousing capacity in India, private players in warehousing, role of policy, economics of warehousing, statutory requirements, compliances, and emerging avenues for the optimization and revenue maximization. Now, I am just trying to bring it for information that, warehousing for agriculture, there is a conventional warehouse which is constructed by brick, stone, and RCC columns. It has lower payback period because investment is not very heavy, and it is like, conventional warehouses are highly labor intensive with lesser mechanization. Use of forklifts are recently been added. Standard capacity is 5,000 metric tons. So companies which are into conventional warehousing are NCML, Star Agri, NBHC, Sonlar, Arya Collateral, all those. Now lately, like last 10 years, Government of India has sponsored silos. Silo is a vertical steel structure. Each silo, if you can see, it is about 12,500 to 15,000 metric ton. It has low running cost, but higher investment into this, because silo structure is very costly structure. Low labor because higher mechanization, fumigation is done through a mechanic, through the mechanized way there. It controls heat or moisture inside the silo, and wastage is low because one silo can hold capacity of around 12,000 to 15,000 metric tons. And because of mechanization, because of packing is not involved, like it doesn't come into a bags, wastage is low. Companies like Adani, LT Foods, Naga Foods, NCML, Total Logistics have constructed silos under various methods like public-private partnerships or viability gap funding models, prominently used for silo constructions. So there is another type of warehouses called cap versus open warehouses. You are aware that cap is covered and plain. When scientific warehouses were short of supplies in the north, like state of UP, Bihar, Punjab, Haryana, they used to put only a plinth which is to be covered by the tarpaulins, and you can store commodities like this. It can be prevented from rainfall, prevented little bit from the heat, but moisture loss was heavy in this. Open structure is the structure wherein it's not covered by shade, but only tarpaulins. It may not have plinth also. So this type of warehousing are one of the cheapest economical mode, but it can't be less of wastage. Wastage would be very high in this. And you are also aware about cold storages, which are specific few commodities like bedana or some dry fruits have to be kept in a controlled temperature. That's why cold storages like chili or there are some other commodities which requires controlled temperature to avoid the decay or contamination. Those are put into cold stores. Now, basic structure and basic warehousing capacity in India and what is the demand supply mechanics that we can briefly talk about. Any questions so far?
I guess not, sir. Or we can do the Q&A session at the end. I think all the participants can ask your questions at the end, sir.
Okay, Upesh. But I thought, at the end, perhaps earlier topics like important topic of fintech and all, perhaps students might require some recap. That's why I thought that if you have any question about startups, fintech or AgFintech, we can take those and then we can take it forward because, those are the hot topics and very important topics to be covered under this session.
Right, sir. Then, sir, I think if any participant has any question, they can raise their hand. We'll allow them to speak. That would be much better.
Briefly, 1 or 2 questions, then we can take it forward.
Or you can also drop your questions in the chat box.
Yeah.
Yes, sir. We have Hari. Hari, you can ask your question, please.
Go ahead.
Hello.
Hari. Yeah. Yes, Hari.
This is regarding the fintech.
Yeah.
So what was the minimum requirement to start a fintech?
Fintech, like you are asking about capital requirement?
Yes.
So capital requirement depends upon your product finally. If you are going to build a platform, it will require higher capital. If you are going to start with without platform initially, try to demonstrate the market, then you can even start with $1 million, which is 7-8 crores. But I'll not discourage you. There are startups which have been started with even a crore of rupees or less than that. So there's no fixed amount, but you need to have a proper product which can be demonstrated into the market. You should have a go-to-market strategy and viable product can really once you can test that in the market, then getting funding from the market shouldn't be an issue.
So what will be the government support for that?
Government has come up with various support programs, subsidies for startups, like no taxes there. If your startup is going to work in MSME, government also is giving some seed capital, could be 10-20 lakhs. It depends upon government's program and subsidy program. So government is providing a lot of support for the startups. In the last budget also, government has announced some benefits like tax holidays. Then if your startup is in a particular field like fintech or for agtech, those MSME ministries or there are some institutes like SIDBI is an institute which benefits MSMEs. So there are some schemes which can benefit, which can be useful for the startups there.
Okay, sir. Thank you, sir.
Yeah, Ari. So further topics are, these are theoretical topics, but very important topics like, what is a demand and supply mechanism for the agri warehousing in India. Government, like in India, we produce approximately 310 to 315 million metric ton of food grain. But our warehousing capacity presently, which is available, is only 188 million metric tons. So out of this, private sector warehousing supply is only 85 million tons. Rest balance 103 million tons is into FCI, CWCs, SWCs, other state agencies like cooperatives and others. So private sector companies like these are the players which are into into agri warehousing in India. You know most of the companies because earlier Professor also might have talked about NBSC, Star Agri, Sohanlal, Sri Shubham Logistics, NCML, Arya.ag, Origo Commodities, Go Green, Apna Godam. So all these companies are prominently working into warehousing, collateral management, e-commerce, procurement, testing, inspection services, farmer financing, warehousing financing, and warehouse receipt funding. So you can go to each of the company's sites. You will get a lot of information about the works they are doing, geographies they are covering, who are the promoters, who are the investors. Like you would see, True North holds 100% in NBHC, National Bulk Handling Company. Star Agri, Temasek is the investor. Sohanlal Responsibility AG of Swiss government, along with Agri Fund, they hold. Kalpataru doesn't have any private equity. NCML 90% is with Fairfax. Arya AG, Kiona, Omnivore, Livestock, these are the investors. Origo, there are other investors like Triodos of Netherlands, Voico Credit of Netherlands, Caspian, Responsibility of Switzerland. Apna Godam has those investors. So once your model is established, most of the companies here are not very highly profit making, but yet they are able to garner interest from the investor. That is because the model has been accepted in the market. It has minimum viable product, and it is solving problem for the rural, for the agri, for the farmers, and for the entire agri value chain. So role of policy and other factors, government has come up with various schemes like Gramin Bhandaran Yojana, Build, Own and Operate scheme, then private entrepreneurs group scheme, public-private partnerships, viability gap funding, through which a lot of silos have been funded. Various state government also has come up with the schemes. So those are available in the public domain. Government has taken a bold decision to come up with the Warehousing Development and Regulatory Authority in 2007. Actually, it came into existence from 2010, has been implemented. So under WDRA provisions, every warehouse which is there, it needs to be accredited under WDRA. So there are some norms, but penetration of warehouses which are accredited with WDRA is not more than 25-30% because of some challenges, some issues, some corporate guarantees, some bank guarantees required to be given to WDRA. But WDRA is a future. WDRA is likely to issue ENWR, that is electronic non-negotiable warehouse receipt. Not non-negotiable, it's negotiable. ENWR. So negotiable warehouse receipt, you can go to any bank and get a loan against that. Now, economics of warehousing. So when we talk about startup or fintechs, that particular fintech or startup needs to be a profitable venture, a venture which can resolve the problem of the agri value chain or of the farmers. So here, I have taken a basic funda of like how much cost one has to incur to construct 5,000 metric ton conventional warehouse, and suppose how much a silo project cost. Silo is little larger project and the bigger project. So to come up with 5,000 metric ton warehouse, it requires at least 3 to 5 crores of project cost, wherein there are some subsidies available with NABARD. Government is allowing funding to construct warehouses into the rural parts of India, and funding is available at optimum rates, like you can get funding at 8%, 9%, and that way you can penetrate the warehousing into the rural parts of India. So silo project is little costlier project. It requires India, there are few companies which construct silos, but there are international agencies, companies who are into silo manufacturing. So through that we can complete this project. Warehousing project again depends upon, there are two major factors which impact or which decide success of a warehousing project or a silo project. That is, it should be able to achieve the minimum utilization levels for any warehousing company or any silo project, which is minimum 75% utilization has to be there throughout the period, throughout the year. to become that particular project as a viable project. If it falls below 75%, that warehousing project will never make money. And second important thing is that revenue guarantee. So warehousing projects need to be getting some revenue guarantee from either from government or from the private players who are into this particular activity. So typical sources of revenue in warehousing, which are the warehousing companies can earn money from, which are the sources, like, warehousing income, that is for keeping commodity into the warehouse. You get warehousing income, like, it starts from 50 rupees per metric ton for wheat, rice and maize to maybe 300 to 400 rupees per metric ton for cash crops like cardamom and jeera. So somebody has raised the hand. Yes. Can you share about fintech funds availability for startup to develop MVP? So about funds availability, like funding availability could be, yes, we can discuss about. Let me complete few of the slides and then we can talk about questions. We got 10 more minutes to go. So these are the incomes, like collateral management fees, fumigation fees, testing certification, income for dry and colds are different. There could be income from spillage, there could be income from supply chain management, export of commodities, import of commodities, income from standard moisture loss, and income from research desk. These are the incomes, which income scenarios where any one warehousing company can earn from. Now, this is a topic about like how the financing is available. So capital funding is available from public and private sector banks. Public banks, which are the banks, like if you go to SBI, SBI has a specific fund for the agri warehousing. NABARD has specific fund for the agri warehousing. Private sector banks, prominent private sector banks like HDFC, ICICI, Kotak Mahindra Bank, Yes Bank, IndusInd Bank have their funds for the private sector warehousing companies. Then international institutes, if you go to sites of companies like FMO, International Monetary Fund, or United States Development Financial Corporation, Asian Development Banks, they have specific funding for the agri warehousing and for projects like this. So this is about the capital funding. Working capital funding, that is working capital demand loan or warehouse receipt loans, or loan to farmers, traders, corporate importers, exporters, that is available. Then there is a new type of products available in the market like pass-through transactions, which are the new instruments where low-cost funding is available, keeping stock as a collateral in the warehouse. Then pricing of warehousing and CM services. Warehousing charges depends upon like whether you are doing warehousing for exchange, that is commodity exchanges like NCDX or other exchanges, or if it is not for the exchanges, then your pricing would be little lower, because if it is for the exchange, you can command higher fees. If it is not for the exchange, fees are not equivalent to that. So pricing factors are, it is like depends upon the commodity. Like we took an example of jeera, which can command 300 rupees per metric ton per month, and rice, paddy, wheat can command 50 rupees, 60 rupees per metric ton per month. WDRA accreditation, if your warehouse is WDRA accredited, it can command little higher fees. What are the other services you are providing along with your commodity? Depends upon this one, like, fumigation services is the one. So pricing, these are the factors which can impact your pricing decisions. So all these warehouses or the fintechs or the agtechs have very high compliance, and compliance is very necessary, because if you talk about fintech, if it is a fintech registered with RBI, then that fintech need to have very cautiously doing their business, because RBI is watchful, and they look at every action of a fintech or a agtech very carefully and very cautiously. So compliance is very important in terms of agtechs, fintechs, and warehouses which are WDRA registered. Then there are various taxes which are applicable in terms of warehousing service providers. One is GST. GST is applicable only on commodities which are non-agri. Commodity which is non-agri could be a commodity which is processed one. Agri commodities in its shape and form which comes from the field is not subject to GST. So that's why the definition of agriculture produce is given here. Input tax credit means suppose A Limited has charged 100 rupees on that, 12 rupees is the GST. B Limited, who has bought that 112 rupees equivalent product, can avail 12 rupees as the input tax credit. That's how the input tax credit comes into being. Then there are a few financial risks which are likely to be taken care of and which are important because quality, quantity risk, price fluctuation, risk of frauds by warehouse managers, warehouse keepers, and traders. So these are to be taken care of. There are various policies available to cover the risk, but insurance, you can't do business keeping in view that my risk is covered by insurance. You need to have proper controls, SOPs, proper checks and balances, inspections, audits, frequent audits for covering those risks. So return on investment in warehousing is very important criteria because all depends upon your money which is invested into the warehousing has to earn return. So that return can come only through making money, implementing the policies properly, collecting money from the market. So ROI is net investment gain, that is net profit divided by your investment. That gives you ROI. So ROI is very important in any particular project, made fintech, agtech, or a warehousing company. So position in value chain and business connectivity, like where you can construct your warehouse, that is important because it has to be near to mandi or near to the delivery center of the exchanges, or it has to be near to railhead, or it can be very close to consumption centers. So depending upon your location of the business location, success depends upon that. Statutory requirements like companies, warehouses which are registered under WDRA have to be compliant with the WDRA standards. SEBI also comes into action if warehouses are keeping stocks of commodities which are where the ENWR, that is electronic negotiable warehouse receipts, have been issued. Then all these licenses are important for particular warehouses. Compliance we talked about a little bit. Requirements of SEBI we talked about, and continuous compliance requirement. Emerging avenues, cost optimization and revenue maximization, automation. Earlier lecture you would have listened about automation and cost optimization, emerging technologies into the warehousing and to the fintechs. So we have talked about this, and roll-up cost optimization, emerging technologies like blockchain, fully automated collateral management, use of Internet of the Things, or use of RFID, use of optical and visual based grading and sorting. Earlier lecturer would have talked about that, and tech visibility of the inventory. So these are few of the techniques you would have heard from the earlier lecture. And then finally, warehouse management system, which is completely integrated ERP system which can take care of all your receiving, counting, stocking, packaging, and even issue of EWNRs. So I would like to hear from you about a few of the questions. If I can address, I'll be happy to do that.
If anyone has any questions, they can either raise their hand or drop them in the chat box. Yes, sir, we have a question.
Yeah, I understand that in spite of best efforts, there has been lots of frauds. Yes, you are right. Lots of frauds happening in warehousing, loan financing and collateral management space, and few banks have restricted commodity funding. Absolutely, you are right. These frauds are because quality quantity is not taken care of, proper audits, proper checks, proper inspections are not there. Post-COVID, just before the COVID, when demonetization happened, few of the traders were not able to get funding opportunities from the banks. So what they did were they shifted good quality stock with unfair quality stock, and that's how they did it. And these traders were very sharp and very intelligent traders. They were knowing, like, suppose auditor goes into a particular warehouse, he will not be in a position to check each and every bag with a perky. Like, if you put a perky, you can get converted into that. So he was knowing that auditor can go up to particular layer. So below that layer, they shifted, they changed the commodities and happened. But absolutely, you are right. That's why banks are very cautious about giving loans against the commodity kept in the warehouse. That's why this new type of companies or new fintechs like Arya AG or NCML or companies like Origo, they have started working on digitized model or use of RFIDs, use of chips in the bags. So with that, to some certain extent, it can be controlled. Frauds can be controlled.
All right, sir. I think that would have answered the question. So the next question is from Kushal. He's asking, can you explain licensing requirements for fintechs?
Yes. So fintech, as the name talks about, fintech is a financial technology company. So if the financial technology company wants to do, give loan on its balance sheet, then it requires an NBFC license. So NBFC license is given by Reserve Bank of India. If fintech is talking about not availing the NBFC license, then there are other licenses like loan service provider license, which has to be taken from RBI, or you would have heard about PPI, like pre-filled cards, or there is like aggregator license. So those licenses are required from RBI. So if it is licensed entity, I think compliance cost is there, but it carries a little weight in terms of getting funding from the market.
Right, sir. So we have another question. The question is, have you been associated with any government bodies to provide your services? And what were those specific services? And the last part is outcomes of such associations, if you can answer on that.
Yeah. So, Manjit, I have been associated with NABARD. NABARD used to do give subsidies to farmers. Women farmers were getting higher subsidies, like, in case of women farmer, 33% to 40% cost was provided by NABARD. And, to avail NABARD subsidy, there are some conditions, but it is possible. It is not impossible to get funding from NABARD. So it was especially for getting funding from NABARD, I was associated. Outcomes of such association, yes, we could get funding from NABARD at a very optimum rates. Do you have any presence in Northeast? Northeast, yes, we have presence. And presently, one of my earlier venture, they were working with Meghalaya. There's an area called Lakdong, where they produce a special quality of turmeric, which has higher, what they call it, higher curcumin in turmeric, which is used for medicinal purposes. So those farmers are getting very good funding. We are trying to connect with those farmers to give them access to finance, access to credit.
So there's a question from Akash. The question is, are there any given case studies or interventions of fintech that improves the subsequent situations?
Improves the
subsequent situations?
Yes, of course. There are case studies like, students, if you get time, you see site of a company called Creed Avenue, CREDAvenue. It's a Chennai-based fintech, which has done wonderful job. It has become unicorn in last 1 year. So it is, company into, like, we talked about, it's a platform that provides funding to fintechs, to MSMEs, to industries, to agri companies, and to other working capital, requisition companies. So that fintech is fantastic. You can study the site and try and understand what a fantastic job they have done. Similarly, there's a Northern Arc company called Northern Arc. Although it is not a unicorn, but they're also doing a fantastic job. Samunati is another company which is doing very good job. I used to be group CFO there in Samunati. They have been trying to resolve problem for the FPOs, FPCs, and women farmers, self-help group farmers. So they're doing wonderful job.
Right, sir. So there's a question from Meghana. The question is, who's the client for AgriFintech, farmer or entrepreneur or warehouse managers?
Who is the client for AgFintech, farmers, entrepreneurs, or warehouse managers? Clients are all, AgriFintech has to work with farmers. It has to work with warehouse service providers. It has to work with customers. It has to work with MSMEs. It has to work with large corporates, because to be a successful AgFintech, you have to work with most of the customers and try to resolve the problem. Akash talks about what is the career opportunity for working in this sector, and what are the requirements, and who can join. So in next few years, you will see that AgFintechs or fintechs are doing fantastic job. A lot of potential is there. So if you are thinking of a career, to make a career into fintechs, this is the right time. There's a large, we talked about $1 trillion asset under management is going to be there in fintechs, with $200 billion of income. So if you are thinking about making a career in fintechs, this is the right time, Akash.
Right, sir. I think that answers all the questions that we had today in the Q&A as well as the chat box. With that said, thank you very much, sir, for sharing your knowledge and presenting a comprehensive view to augment development in AgFintech sector.
Thank you, Bhupesh. Thank you, all the students. I'm really, happy to share my knowledge, whatever I have earned. So thanks for this opportunity. And AgMatrix is doing fabulous work, amazing work for imparting knowledge about the segment, which is the segment which has very high potential, like fintechs, AgFintechs, and warehousing of agri commodities. Because post COVID, food security is very important. Various countries are putting money into India. They're saying that you please produce for us. So this is the sector which is booming. So AgMatrix is doing a lot. It's amazing work you all are doing. Thank you for that.
Right, sir. Thank you so much, sir, for sparing your valuable time for that.
Thank you.
So here we come to the end of today's session. Tomorrow, the same thing, AgFintech sessions will be continued by co-founder of Arya Ag and ex-NABARD officials. So it is a request for you all to please join on time. Thank you so much, everyone, for joining today.